Reiterating headline earnings per share, Nick, down 16%. And welcome. I always forget to actually say hello and thank you for joining me. Nick Kunze, Head of Private Client Services at BJM. Thank you very much. And actually, I've got your title wrong now as well, haven't I? Shall we move on?
Move on quickly, yeah.
ACI, revenue down 16.7%, and we've seen the final dividend slashed some 56%. What do you make of this one?
Look, no one wants to see dividends being slashed. It's a little bit disappointing. I think shareholders will certainly not be looking for any good news in a hurry. Very cyclical business, of course. Last year, probably, as you've seen all the miners, this is not sort of excluded either, that probably one of the toughest trading years on record. And the stock's been a relative not really doing much, and today, sold off again, I believe.
Shoprite, you sat through the interview with Whitey Basson. Again, a solid set of results that we're seeing in the interim period. HEPS up 13.3%. That's to 208.05 cents. Sales up 11.9%. And despite sales only being up 11.9%, they managed to increase their trading profit by some 17.5%. So very effective management on that line. But the stock is expensive.
The stock is expensive, and Bronwyn, certainly what you expect from a management team like that. I mean, extraordinary result. The stock is not cheap. It's trading on an 18 PE. It's trading on a price to book of almost 6. It's up about 17% year to date, and I think about 30 or 40% in the last sort of 4 or 5 months. So it is expensive. But we've seen recently in that whole sector there's been a bit of a reweighting over the last few days. There's been big foreign interest, big foreign buying. Saw the likes of Woolworths yesterday, also up 4%. The same again with Shoprite yesterday. I mean, the volumes, I believe, yesterday were the highest on record. I mean, I think it's second only to the dual listers for the amount of volume going through. So it's a huge interest in our local retailing market. And as long as the foreigners continue buying, there's going to be support.
Judy saying on the technical front that it is going to sell down somewhat from these levels, but that technically she would be accumulating again at 72 rand.
Look, when you have all-time record volumes at an all-time high, you normally don't want to bet against it, and there's a lot of people with vested interest at higher levels. There's no doubt about technically it is overbought. Fundamentally, it is starting to look expensive, but as Judy pointed out as well, heading into probably a tough sort of choppy trading period, some of these defensive counters like the retailers will certainly not a bad place to be. And
Wilson Bailey Homes out with interim results that after news out from Aveng saying that their headline earnings per share would be down 30 to 35%. So construction companies under pressure, but Wilson Bailey Homes managing to have headline earnings per share up 19%, but cautious on their 2-year outlook.
Yeah, cautious, but also this is what we've been saying for a while now. This is such a stock picking market. Same sector, look like Murray and Roberts really battling. Look at Aveng really battling. Wilson Bailey increasing the dividend, I think, from 100 cents to 110 cents a share. Certainly, we believe it's one of the our preferred choices into that sector. So still, I guess what happens the next 2-3 years out is the big question mark. I saw the CEO speaking today, alluding to a little bit again that famous word transparency. It's a little bit difficult 6 months to a year out, but
they're concerned about the outlook beyond 2010.
Exactly, and I think that goes for most construction companies, and the whole fear of a double-dip recession and all the rest of it. Where does it leave us? And certainly with a stronger rand as well. But I thought a very impressive set of results, and I'd certainly be buying this on weakness.